Today's hearing is a hybrid format. Witnesses are in person. Thank you to all 7 of you for joining us. And I know yesterday was a long, grueling day. Today will be shorter, if nothing else. So thank you for giving us your time. Members have the option, however, to appear either in person or virtually. There will be good turnout on both sides, and I assume most of our colleagues in both parties will be here in person. For too long, everyone called this committee simply Senate Banking because it always delivered for Wall Street. We changed that as the Senate Banking and Housing and Urban Affairs Committee. We put the Main Street economy and the workers who power it at the center of everything we do. Part of that commitment is to hear directly from the biggest banks that hold so much power in this economy. It's our job to hold them accountable to their workers, their customers, and to the American people. Today, we'll continue a tradition we started last year and hear from CEOs of the nation's 7 biggest retail banks. After years of consolidation and concentration through banking crises and rubber stamp mergers, your banks dominate the banking industry. Together, you have over $13 trillion, $13,000 billion in assets. That's half the nation's GDP. You have hundreds of millions of customers. You also have the benefit of a federal backup, a safety net, something that your customers do not have. Your decisions affect millions of people's lives, whether they can get their paycheck, how much it will cost to use their hard-earned money, whether they can save for retirement or their children's education, whether they can buy a house or make their rent payment. You profit from those transactions to the tune of hundreds of billions of dollars. With those profits and with the taxpayer support you get, come a responsibility to serve your customers in the larger economy. I think you know you don't always hold up your end of the bargain. All of your banks have promoted, for example, Zelle, the payment app that most of you own. You push this on customers, but you haven't taken responsibility for the fraud that's perpetrated. We all know about Wells Fargo's fake account scandal. We've learned that Wells wasn't alone. In the never-ending quest for short-term profits, it turned out that other banks pressured employees to open false checking accounts and credit card accounts. Customers who trust you to look out for them ended up with unjustified fees, damaged credit reports, and accounts they did not want, or in many cases did not even know about. It's even worse for brown and black borrowers. Too often they walk into many of your banks not knowing if that check will be cashed or if they'll be able to open an account. When mortgage rates were at record lows, many of you were more likely to deny mortgages to black and brown borrowers, making it even harder for these families to build wealth through home ownership. You focus on loans to wealthy clients with massive stock portfolios. At least one of you has complained about the paperwork on mortgages or small business loans for Main Street. And when customers try to hold you accountable for cheating them out of their money, you subject far too many of them to forced arbitration. You take away people's choice on how to pursue justice because, as we all know, if there's one thing Wall Street hates, it's real consequences. It isn't just the outright scams and fraud that damage our economy. It's your entire business model with short-term quarterly profits is the holy grail. I've talked with workers in Ohio and across the country in places that so often get passed over for investment. They tell me about the challenges they have with the banking system. They've watched your banks let them down time and time again. It's why so many people don't trust the financial system. They've been burned over and over by second chance accounts, foreclosures, late fees, overdraft fees. They've been turned down for loans. They've seen branches close. They've been scammed out of their money. Yesterday, I spoke to an Ohioan whose accounts were illegally frozen by one of your banks. She had zero access to her funds for a whole week, and the bank intended to take $442 out of her account, leaving her with nothing. So it's not surprising that more and more Americans turn to shady payday lenders or risky crypto apps. They feel like they don't have any other choice when they have bills piling up and need to come up with more money. Over a third, and you've heard this number, over a third of Americans report they would not be able to cover a $400 expense in an emergency. Think of that. If their car breaks down, if they lose their job, if their child needs surgery or something. All of you make tens of millions of dollars a year, 150 to 900 times what your median employee makes. You don't think twice about $400. That's not a luxury that most Americans have. They don't get the same breaks you do. During the pandemic, the Federal Reserve waived overdraft fees for you, for banks, yet none of you waived those fees for your customers in 2020. And it's not just your customers who have to make tough choices because of decisions that you make. It's also your workers. You spend your billions in profits on exorbitant executive pay and stock buybacks instead of investing in workers and communities and customers. You say you provide your workers with good pay and benefits, but how does it feel as a worker to be pressured to open fake accounts or to deny services to someone who walks in the door who doesn't look like you? Hardly a culture promoting the dignity of work. Don't take it from me. Listen to what bank workers have said. From one Wells Fargo worker: we want the customer base to know we're forming a union really for them. We're tired of having our name dragged through the mud at Wells because of things that we're asked to have more control over, but the company refuses to give us that control. But it's not just Wells Fargo. Another worker said, they keep telling us we no longer have sales goals, but we're giving expectations as far as loan volume, new accounts, day one mobile activation. Not meeting these expectations will result in disciplinary actions. They added, but the loyalty and responsibility I feel for my customer keeps me fighting every day. Trust us, you say. We're making changes. We don't need government watchdogs. We don't need regulation. But trust goes both ways. With crisis after crisis, with scandal after scandal, the biggest Wall Street banks have lost the trust of the American people. And as super regional banks get bigger and more complex, they're starting to look more and more like Wall Street. I expect all of your banks to build up capital, to use it to invest in communities, not just shareholders, not just your own compensation. And we expect you to treat your customers fairly. We expect you to take steps to make banking work better for your customers and for your workers. Steps like eliminating overdraft and excessive fees, lowering the cost of basic bank accounts, ending forced arbitration, offering affordable home loans to all eligible borrowers in all communities. It means paying your workers, including contractors who feed you, contractors who clean your offices, contractors who keep your banks and offices safe, paying them a living wage. Some of your banks have taken positive steps to eliminate some fees and give consumers more power and choice over their own money. We thank you for that. Some of your banks have made commitments to increase your workers' wages. We thank you for that. That's a good start. These positive steps need to be part of a real commitment for changing how Wall Street does business, not just one-offs. You're among the most powerful people in this country, in this economy. Your entire industry and its substantial safety net are supported by American taxpayers. It's past time for the financial industry to be as good to the American people as the country has been to each of you. We'll continue to hold you to the highest standards so that Americans can keep more of their hard-earned money.